in terms of sustainability, real estate is actually relatively well advantaged. In terms of climate particularly, real estate companies have a lot of options for decarbonization relative to other sectors, and most importantly, a lot of the levers for decarbonization for real estate companies can be value accretive.
Joining me today is Shepley, Senior Director for Climate Solutions at Nuveen Asset Management. Thanks for joining me.
It's a pleasure.
Can you tell us about Nuveen's approach to sustainability for public real estate?
Sure. So Nuveen has a long history of responsible investing and also a long history of real estate investing. We consider material sustainable issues for real estate within our valuation models, and we incorporate it within our analysis. And last year, in the spring of 2023, we launched the Global Real Estate Carbon Reduction Strategy, which has the objective of long-term capital appreciation as well as current income by investing in listed REITs that have either a goal towards carbon neutrality or reducing greenhouse gases at a rate that's aligned with the Paris Agreement or the goals of the Paris Agreement.
And how do you view real estate compared to other sectors in the public market in terms of sustainability?
So in terms of sustainability, real estate is actually relatively well advantaged. In terms of climate particularly, real estate companies have a lot of options for decarbonization relative to other sectors, and most importantly, a lot of the levers for decarbonization for real estate companies can be value accretive. So things like energy efficiency, which helps with cost savings, or even making a portfolio of green buildings helps with tenant demand and pricing. And so compared to other sectors, say like the auto sector, where you have a lot of upfront cost in transitioning, you have to invest in new plants, new supply chains, and really you're facing uncertainty with respect to demand. It can be very challenging. In real estate, at least for company operations, it's a bit easier, and technology has also developed to a state where there's a lot of options to understand where the highest ROI is for your decarbonization CapEx, which is really important. Now, there still are challenges with real estate. So, for example, embodied carbon, which is more relevant for developers, but it's an area that can be very challenging, where you have to source materials that are that have a lower carbon footprint, and a lot of those have yet to be developed. So that's an area where we see as the next phase of sort of the real estate challenge. But from a sustainability perspective, real estate really has a huge input on demand. And so in terms of reducing greenhouse gas emissions, real estate has the potential to reduce energy demand, but also to stimulate demand for recycled materials and really help spearhead the circular economy.
And how do you see proactive climate risk management and decarbonization planning creating value for REITs?
So there's some variance between markets, where certain markets have a lot of tenant demand for sustainable buildings. And what we see in those markets is that you have the ability to get higher pricing, and you also have the ability to create deeper partnerships with tenants and customers. So we see a lot of the efforts on decarbonization as value accretive. Again, there's a lot of ways that companies can also save on costs. And generally, we think that the efforts may not be realized today, but with future regulation coming down the pipe and a lot of focus on the climate crisis getting worse by lawmakers and policymakers, we think that a lot of efforts can be rewarded in terms of investors' view of the resilience of cash flow and resilience of earnings power over time. So that often shows up in valuations in terms of how investors are valuing certain assets. And so from that standpoint, we think that there's a lot of benefits for companies being proactive. As investors, we're always trying to understand how their budgeting and how their CapEx plans are evolving. And we also want them to be selective. So amongst a portfolio of assets, a lot of times there's the 80-20 rule where you have a few assets contributing disproportionately to your carbon footprint. And so tackling those in smart ways and using new technologies that are available are often prudent financially. And so we expect that of our companies.
And finally, what has been the response so far to Nuveen's global real estate carbon reduction strategy?
It's been really positive, and there's been a lot of traction towards the strategy. I think investors appreciate the rigorous approach to sustainability and the underwriting criteria that we have for companies that are eligible for the fund, and also performance. So I think investors are really interested in being able to drive sustainable outcomes while also driving attractive returns. And that's something that the strategy is focused on delivering.